All right, so this is the trade we took. There's something I really want to show us before I proceed. This is the trade we took yesterday, right? Look at this. This is a 3 hour trade we took yesterday. And then look at this. There's something really important I want to show you. Now, that is why trading on this platform is better, all right? That's what, please mute your mic. Okay, that's why trading on this platform. If you need to ask any question, just drop a message in the chat. That's why trading on this platform is way better because look at this. This is if you were to be trading on the MetaTrader 5, for instance, look at this. The market, we entered the trade here and we took a 3 hour trade. So it was 1, 2, 3. So the trade ended here, right? It ended there. But look at what later happened, right? This trade actually still went down like this to this level, eating had it been this our what's it called? Our barrier extended to this level, we would have lost this trade. And had it been you were trading MetaTrader 5, you would have been, and your stop loss were to be here, you would have lost this trade. But then the market is actually now going in our original predicted direction, as you can see. So trading with this trading type or trading with this kind of strategy helps you to um, take advantage of the market without taking losses unnecessarily. All right, there are some times that the market will respect what you're doing, what you say it's going to do for a short period of time, and then it will go against you just like this here. But then because of our strategy and the way we trade, we're able to scale through and even make profit from this. So let's assume yesterday was like we started our compounding interest and yesterday was day one. If I want to take another trade here, I'll probably do something like this. Let's actually even do an analysis before we start today. All right. If I were to do my analysis, I'm going to do top-down analysis. I know that this market is an uptrend, but currently it's kind of giving us a push down. So I'm just going to go down into the time frame like this to see what is really happening. As you can see, let's see. Let's go down to the 1 hour. Okay, this is not a good market to trade. And as we progress into the whole section, you're going to understand why this kind of market is not a good market to trade. All right, so let me check another one here. Let's check volatility 10 1x index. Just from looking at the market from the 24 hours time frame, I can actually tell if the market is actually a good one or not to trade on. All right, but then this one is something I could, let's see if it's something I could actually trade on. Let's go to the 1 hour there. I could actually squeeze a trade in here, but I will not be taking that kind of risk. So I will just check another market, volatility 10 index. Okay, not good. Let me just stick to the 1 hour time frame. I can actually take a trade on this one, but I will still wait on this. Let's see, 51x. If you have a question, you can type in the chat. This one is a very good one, but we've lost like all this, right? The market has gone far, right? The market has gone far here. But then we could actually still take a trade here, though the market has gone far, but we could still take a trade here. I'm still going to be coming back to this one. That's 51x. So let's go to 50 index. Hold on, I'm trying to charge my phone here. Okay. All right. This one also is a good one, but then it has gone far also. But we can still squeeze in a trade here. So I'm going to come back to this one. Our advice is to make use of common symbols like gold, euro, JPY. No, I don't trade currency pair. I trade volatility index. So I won't be using those ones. Again, you're going to understand. This is just me trying to place a trade. All All right, this is just me trying to place a trade here. We have not actually started. I'm just still looking for a trade to place, quick trade. All right, I'm not actually doing a proper analysis. I'm just trying to see if I can get into a real quick trade here. Okay, I think I can get into this one, volatility 101x. Let me just get into this one. This one is also a good one, but then let's see 101x here. Okay, so let's see if I can get into this trade. We're using the hours duration. So I'm going to be dragging my barrier like this. And then we're targeting 13%. This 15%. No touch actually. So this 10%, as you can see, this 10%. So I'm just going to drag this a bit up. 13%, all right? So I'm going to be targeting 13% like this. And I'm going to be taking the trade. And then in the next 3 hours, we're going to see the result of this trade. This is just me taking trade. I'm not even doing proper analysis yet. Right? This is just me taking a real quick trade here. But then I'm targeting my 13%. And then yesterday we took a trade. I think last night we took a trade, a 3-hour trade, 13%. We had a win on that trade. I'm taking another one here. I'm going to share you guys the results of this one. Again, I am not really doing analysis here. I'm just really taking a quick trade here. Now let's get into what we have for us today. Right, so the trade is currently running. In 3 hours time it will be done. And then if I happen to win, if this market did not go down and touch this all I just want is for this market not to go down and touch this my barrier till it gets to the finish line. I don't want this to happen. All right, as long as it did not happen, and then it does whatever shit it wants to do like this till it gets to this finish line, right? I want the trade. It's as simple as that. So that's what I'm actually anticipating would happen. So let's go to what we have for us today. All right, so our scheme, all right, our outline, we're going to be talking about candlesticks today. Candlesticks. So what are candlesticks? All right, I'm not going to be taking too much time on candlesticks, and that's why I'm talking about it now, because it's not something that is a really broad topic like that. From the next topic, like time frame, that is where things start to get serious. But candlestick is not something that is really serious like that, but it's something I really need to talk about, considering that I promised that I'm going to be taking this from beginner's level. All right, so what are candlesticks? Now look at these things here. They are called candlesticks here. Now candlesticks is one way to read the chart. Now there are a lot of things. You can decide not to use candlestick. I can decide that I want to just use lines like this. You can actually use lines like this. Or we can decide that we want to use lines like this. You can decide that you want to use step lines like this. All right. There are some people that use this. You can decide you want to use area. There are so many ways to actually check and predict the market. You can decide you want to use this one or baseline or whatever like this. Or you can decide you want to use hollow candles like this, whatever. But then the ones that are, you can decide you want to use bats. But the popular ones here are candles, right? Candles. And the reason they are called candles or candlestick is because they look like candles. If you look at this, they look like a candle, as you can see. They look like a candle. This is the shape, or this is how a candle look like. And that's why they are called candlesticks. All right. So now candlesticks are of two types, two colors. All right, mainly. So don't let the colors deceive you. You can actually edit this. I can actually edit this to change this to whatever color I want this to be. I could do this. I could go to my settings right here and edit the colors, right? I could literally edit the colors. As you can see, I could edit the colors right here to choose whatever colors I want. All right, so the most popular ones are the red and the green candles. All right, so you could literally use whatever color you want. So don't let the color confuse you or whatever. So it depends on the whole thing. But then let's go with the most popular, the common one, the one we're used to, the red and the green colors. All right. So what does the red color mean? Now, the red color means that the market has just moved right to the downside. All right. Anytime you see a red candle like this, it means the candle started at the top here. All right. The candle started at the top and then it ended right here. So it's moved from up to down. All right. So if you see a green candle, it means it started here and it moves from down to up. So it moves upward if it's a green candle, and if it's a red candle, it means downward. So if you are looking for a downtrend, guys, in a downtrending market, you are going to see more of green candles, red candles, right? So look at this. Look at this here. From this place here, let me show you. From this place here to this place is a downtrend. As you can see, the market moves to the downside. And then you will notice that because it is a downtrend, we are seeing more of red candles. As you can see, we have 1, 2, 3. We have more of red candles to green candles because it's a downtrend. So in a downtrend, we are expecting to see more of red candles because the market is going down. So we are going to be seeing more of red candles. Our red candles indicate that the market's moved to the downside. So in a downtrend, we are going to be seeing more of what? Red candles because the market is moving to the downside. So we are going to be seeing more of red candles like this in a downtrend. And then in an uptrend, we are going to be seeing, let me show you an instance of an uptrend. Look at this. The market's moving from here to here is an uptrend. As you can see, it's moving up, as you can see. And if you see that in that uptrend, yeah, we have more of green candles to red candles. Of course, we are still going to be having some red candles, right, in an uptrend, all right? Like I said, in an uptrend, the market would not just keep going up for eternity, right? There's sometimes that's going to do what? Retracement, continuation, retracement like this. It's going to keep doing stuff like this. But then we are going to be seeing more of what? More of, thank you. Thank you for that. So we're going to be seeing more of what? Green candles in an uptrend. So that's another way to know what trend the market is in. So in an uptrend, you're going to see more of green candles, right? Because green candles indicate that the market is moving up. Look at this one now. What this one means here is this market moves from here and it ended here. And this one started here and it ended here. And this one started here and it ended here. This one started here and here, like that. So that's just how this looks like. So that's basically how candlesticks looks like. So red candles signify that the market is going down. Currently, at that point, is going down. Now, let me show you even more closer examples. So let's go to the 1 minute time frame. Let's see how this candles actually moves, right? Let me show you. If you watch this on the 1 minute, you can actually see how this candle are moving. Look at this is a new candle. It goes up, it turns into green. It's going up like this. It comes down, it turns into red. As you can see, it's moving down, it turns into red. It goes up, it turns into what? Green. Let's see this. If it goes up now, it's going to turn into green. It's coming down, it's turning into red. As you can see, the red is still coming down, so the red is getting longer. This is how the candlestick formation happens. This is how candlestick formation happens, right? So the red candles means the market is going down. The green candle means the market is going up. Do we understand that, please? Do we understand this? I want us to reply in the chat. All right. All right. So we understand that. So that is basically what candlestick is. Now, there's something else I'm going to talk about concerning the candlesticks. All right. There's something else I'm going to talk about concerning this candlestick. Now, let's go closer. Now, look at this. Look at, in most of all this candlestick, you are going to see something like this that looks like what? A tail. Like this one, this thing here. This line here from here to here, right? This lines here. What do they mean? I'm going to show you what those lines mean. But then I want to show you up close how those lines form. Look at this one now. Let's wait for another candle. No, this is a new candle that just formed. Look at this line. This line means that this candle has gotten here before. That's gotten to this level before. Let me zoom this in. I want to really show us how this happened. It means that this candle has gotten here before, but then it went back up. Look at this. It has gotten here before, but it went back down. Look at this. It has gotten here before, but it went back down like this. So that's how those candlestick tail, this thing are called tail or wick. That's how they get formed. They're formed. So let's wait for another candle to start. And you're going to see how they actually form. So it means that this candle has been here before. It means it has been here before it's now start coming down like this to form this. This means that this candle was a green candle before it came back down to turn into a red candle. That's what this means. This one means that this candle has gotten here before it came back up here and it ended it. Now look at, let's watch this one together. Look at this one. It got here, it went back. So let's see. Anywhere the candle has gotten to is going to leave a mark or a print there. That's what this means. It got here before, it leaves a print there, it went back. All right. So this print is going to get covered if this market comes back here and cover this. So that is going to get covered. But if this market goes back up and turns into a green candle, this is going to leave a print here that is telling you that I was here before. Telling you I was here before. So that's what this tail means. So whenever you see all these tails, you know that the market has gotten, or the candlesticks has gotten to this level before, just like this one happened. It has gotten here before it's actually now starts moving to the upside. So it means it was previously a red candle before it started moving up into a green candle like this. Look at this. Remember, when we started this candle, it actually gave us a red candle before it now started moving up like this. So that is what those tails means. So whenever you are seeing all these tails here like this, like all these tails here, look at this one. Let me give you an example here. Look at this one now. It means this candle, this market started here. It came back down here. At this point, it was a red candle. It came back up to this level, came up to this level, came back down here, and ended here. It's as simple as that. So that's what this means. So let's see another example here. Let's see another candle formation here. Right, let's say another one starts. Another one is going to start in 30 seconds. So let's follow that one. We're going to follow that candle and see exactly how that actually works. All right. Let's see how that actually works. All right. So we have like 20 seconds remaining before another candle starts. Now we're going to follow that candle and see exactly how it works, how the tail formation forms or the wick or whatever, and how they actually form. So we can understand candlestick properly. As you can see, it's a green, it's going up, it's going to be a green color, it's coming down, it's going to be a red. So another one has started, all right, it's giving us a push to the upside, so it's a green. Now it has given us a red push, leaving a mark or a print that I've been here before. That's what this thing means. I've been there before. That's what that tail or that wick means, or is trying to tell us. Look at this one now. This small tail means that I've been here before. And that's what this actually means. So we need this understanding. We need to understand candlesticks and how these things happens. A deep understanding. We cannot just go into the first market and see all these things and do not understand how they happen or what they mean. That's what this whole section of training is going to be about. You're going to understand every single detail. And if you understand every single detail, forex trading is not going to be difficult for you anymore. And then we're going to be taking everything one step at a time till we understand all this thing properly. So look at this. It was here before. It was there briefly. It was a red candle briefly, and then it has been going up. As you can see, that's what this actually means. All right. And then it got here, came back down, and it ended here. That's what this means. So guys, do we understand this? Let me unmute us so we can actually unmute the mic, and then we can say something. So do we understand this, guys? Do we understand this? Do we understand this? We can actually unmute ourselves now and talk. Do we understand? All right.
Yes, sir.
All right. So that is candlesticks for you. Now, guys, please and please. Now, we have over 130 something people in the group, and then we have just 9 people here. I know it's in the morning. A lot of people will not be online, but then this is what I want us to do. After the end of every section, every lecture, right? Just give your sincere review. If you learn something new, just comment in the group so others will be motivated to want to join the next section. All right. Joining the live section is so much more interesting than watching the recorded version. So I really would want more people to join us so I can actually even give more information. All right. The more people I have here, the more excited and the more I want to give. All right. So, and that's just it. So at the end of this whole section, just go to the Telegram group and give your sincere review. If you really learn something, don't sugarcoat anything, just give your sincere review. If you do not understand anything, put it there, and then we'll be able to, work on a better way for you to understand the whole thing. The whole section here is for you to know how to trade forex profitably yourself, and then it's pointless if you do not understand what we're doing here. That's why I always take my time to explain this one after the other, right? So we understand. I like to carry everyone along. So that's basically it on candlesticks. Now, the reason I'm not going to be taking so much time here on the candlestick is because it's not so difficult. We really understand all this properly. It's not something difficult. Now, where we are going to be having a real longer class or longer duration is when we start talking about time frame, because that is where the whole thing gets started. Candlestick is not so difficult. But does the red candle also means that there are a lot of sellers in the market, and the green candle means that there are a lot of buyers in the market? Yeah, red candles means that sellers in the market, and green candle means that buyers. So I don't want to start using those terms yet. I don't want to start using those terms yet. I want people that are just joining, those that are new to forex to understand, all right, properly. So let me use the term buyers and sellers. Now, look at this. In forex market, it means that if this thing is going up, it means buyers are taking control. So if you buy here and the market is going up like this, you're making profits. It's just that basically it means there are more buyers in the market. Now, guys, forex trading is just what really moves the market is just buyers and sellers. All right. So if there are more buyers, let's say there are let me use this as an example, right? So let's say there are 100 people in the market, right? Let's say there are 100 people in the market, right? And then we have 60 buyers and 40 sellers. If you have 60 people buying and 40 people selling, we are going to have more buying power. You're going to see the markets moving up like this because there is more demand than supply. So there are going to be more buyers, right? The price is going to increase, right? Because increase in demand, all right, leads to increase in price, all right? So the more buyers we have, the more the price increase. It's as simple as that. So if there's more buyers, there are 60 buyers and 40 sellers, of course, the market is going to go up. The price is going to go up because there's increase in demand, all right? So at the point we see something like this retracement here, it means sellers are now taking control, right? We are having now more sellers than buyers. Now it's not getting to like maybe 56 sellers and 40 something buyers. All right. So it will not happen for long. In an uptrend, buyers will quickly take control again, and then we have more buyers, and then we're going to have something like this. Sellers are going to take a little bit of control, then buyers are going to continue. Sellers take control, buyers are going to continue. Except when sellers now take total control, we now have something like this. Sellers are now in control, buyers take a little bit of control, sellers take control, like that. It's as simple as that. We're going to be seeing a lot of all this later on as we go into the whole thing. So I don't want to give us so many information at the beginning at one time. So as we proceed into the whole section, into the whole lecture, we are going to understand this whole thing, this whole concept properly. So today we're just talking about candlesticks and how to understand candlestick. And I think from this little lecture that we've been able to have, we now understand the concept of candlesticks, how they form, those wick and everything. We understand candlesticks. We understand if we see a red candlestick, we know what it means. If we see a green candlestick, we know what it means. So that is what this section is about. Now, this whole section is being recorded, and I'm going to be posting in the I'm going to be posting on YouTube, and I'm going to be posting the link in the Telegram group. So again, if you learned something here today, drop your review in the Telegram group so others will be motivated to join the next class. All right. So thank you guys for joining this section. And then tomorrow or maybe later tonight, we're going to have, or tomorrow probably, because I'm going to be going live on TikTok today. And then we're going to be talking a bit more about introduction and all that. So, but then tomorrow we are going to be talking about time frame. All right, we're going to be talking about time frame again. If you are not in the mentorship program yet, you're going to be missing out on a lot because, of course, we are doing preparation on all that. And once we get to 20 people in the paid mentorship group, we are going to get started with everything, the compounding interest and more things that we're going to be doing. All right, so that's that on that. So thank you guys for joining. I'm going to be ending the live section now.